Everyone, in this video let's discuss about clause 11 to clause 20 of tax audit clauses. So clause 11 deals with checking whether the books are prescribed in section 44AA for that particular entity, and if yes, whether the list of books so prescribed, and we have to mention the list of the books or of accounts maintained and the address at which the books or accounts are kept. See, if it is kept in a computer system, I have to mention the books of accounts generated by the computer system. If the books of accounts are not kept in one location, I have to furnish the address of all the locations along with details of the books maintained at each location. List of books of account and nature of relevant documents which have been examined. Now, what are the audit checklist for this one? I have to check whether it is maintained. In case of professionals, see, requirements of section 44A read with rule 6 have to be kept in mind. In case of corporate SEC, the books of accounts required to be maintained as contained in the relevant statute. For example, Companies Act. Rule reads Redwood section 44A has prescribed books of accounts to be maintained by the professionals. In case C is a professional, then only enquire under say clause 11A will be addressed, answered in the affirmative, and list of books prescribed will have to be given. In case C is engaged in business, no such books have to be prescribed. Hence, this question will be answered in the negative. Okay, only for professional, this will be answered in positive. Obtain a schedule indicating and should be duly certified by the responsible officer. Where it is kept, the place has to be maintained, and then inquire whether it is maintained in a computer system. If yes, obtain the list of books that are maintained in the computer system. And in respect of financial book, I have to obtain the details, and then I have to indicate all the books that have been examined, and then in case of branch return, similar information with regard to books of account, that should be asked for. So with this, clause 11 comes to an end. Now, clause 12, that is with respect to presumptive income scheme, whether the profit and loss account includes any profits and gains assumed on presumptive basis. If yes, indicate the amount and the relevant sections. Okay, I have to check whether the profits and gains of business are accessible on a in the relevant section. Okay, now where the profits and gains of business are accessible to tax under presumptive basis and any of the sections mentioned below, the amount of such profits and gains credited or debited to profit and loss account should be indicated. Okay, if the profit and loss account does not include profit accessible on presumptive basis, then there is no requirement to furnish this particulars. Now, what is the audit checklist? If the income is taxed on a presumptive basis, the NSC is not entitled to claim any expenditure except the salary and interest to the partners in the case of a firm. The auditor should ensure that the SSC does not claim any such expenditure. For the return on value of any asset used for purpose of business shall be deemed to have been calculated as the SSC had claimed and had been allowed the deduction in respect of the depreciation for each assessment year. So only the return on value will be reduced, but the depreciation will not be allowed. The auditor shall ensure the return value of the asset is correctly determined. Go to the profit and loss account, check whether there is any revenue from business which is assumptible to presumptive basis, and go to the past assessment records. Qualify the report if there is turnover from business in the gross turnover, but because income from such business is computed to be on presumptive basis, and if it is computed under normal provisions of the act, then accounts are required to be audited. If I'm following the presumptive system, then no requirement of audit. But if I'm for opting for presumptive scheme but giving us a normal profit, then such accounts has to be audited. Now, 13th. Clause 13 method of accounting. Okay, whether what is the method of accounting employed and whether there is any change that has to be disclosed. And if it is an affirmative, I have to give the details of such change. It has resulted in increase in profit or decrease in profit and how much amount. Whether any adjustment is required to be made to the profit and loss for complying with the provisions of income computation and disclosures as ICDS. Okay, notified under section 145(2). If answer to D above is affirmative, give the details. If there is any adjustments to be made, I have to mention the name of the ICDS and whether it is resulting in increase in profit or decrease in profit, and the net effect have to be mentioned here. Disclosure as per ICDS, that is each ICDS have to show. There are around 10 ICDS are there to show that and whether disclosure requirements have been fulfilled. Now, checklist. Review the accounting policy follow. That is, it could either be a mercantile or cash because hybrid system is not permissible. Only mercantile or cash. Management representation to be obtained and attention to method employed. Interest on these things have to check. FD interest, insurance expense, export incentive, tax refund, cash incentive, benefits arising from business like free holiday trip, claims settled, and then bad debts recovered. Now, I have to inquire whether there is any change. If yes, I have to note down the details and take a copy of the previous year financial statement and compare and check it. Okay, have to obtain a management representation. Have to get to know the reasons for the changes and have to quantify the effect of change in the method of accounting on profit and loss for the current year. Then for clause 13D, I have to ensure the method of accounting is in conformity with accounting standards, and if there is any deviation, I have to quantify the effect. And for clause 13E and F, I have to report if there are any adjustments, review the disclosures are complete in line with the requirements of ICDS. ICDS is not meant, this is an important point, ICDS is not meant for maintenance of the books of accounts or preparation of the financial statements, okay, because we are going to follow accounting standards or the Indian accounting standards in the, okay. Persons are required to maintain books and prepare financial statements as per the accounting policies applicable to them. The accounting policies mentioned in ICDS 1 being fundamental in nature shall be applicable for computing the income under PGB or income from other sources. The accounting policies are general accounting policies are applicable, that was AS or AS will be applied, okay. But for the purpose of income computation, I will be applying in the ICDS, okay. Now, 14 deals with stock. Method of valuation of closing stock. If there's any deviation, I have to show the impact in the profit and losses, increase or decrease. So, ascertain the method of valuation. If there's any change, I have to determine. Even though there is no change, I have to see. And whether there is any change in basis of determining cost market value, even though there is no change in the method of valuation, the same should be reported. See, I am going to ascertain some basis for determining the cost, market value, and net realizable value. There is no change in the method of valuation, but there is a change in the basis. Okay, that also have to be reported. Then, management method of that is by way of return representation, and then assessee obtain the inventory valuation sheet. Stock records have to be checked and balanced, right? An inventory valuation sheet should be checked thoroughly, and then if there is any change in the method of valuation, then the fact has to be stated. If the SSC is not maintaining any stock records, that is also to be mentioned. The fact is also to be mentioned. If possible, depute persons to attend stock taking by the SSC to review the process, like inventory taking, right? We have this in SS also, right? The same process have to be followed here because it's again an audit. Now, clause 14B, review the method of valuation adopted for valuation of closing stock and compare the same with the method prescribed under section 145A. Ascertain whether the method of valuation is such that the value of closing stock includes the amount of tax, duty, cess, or fee actually paid or incurred by the SEC to bring the goods to the place of its location and condition as on the date of valuation, which will include the taxes which are incurred till bringing it to the place of the location or condition. Pay particular attention to the following: that the duties paid in respect of goods cleared have been included. It is payable in respect of the goods held and bought have been included. Opening stock check, okay, even though it includes all taxes, even though they are refundable in nature. This is again an important point. Could be an MCQ. Even though it is a refundable taxes, I have to check whether they have been included, ascertain whether there is any deviation in the method of valuation of closing stock as compared to the provisions contained in section 145A. If yes, ensure the fact of the deviation and effect of such deviation in profit and loss account. Now, clause 15 with respect to capital asset converted into stock in trade. I have a building. Now that I'm entered into a real estate business, I'm going to convert it into stock in trade. Okay, it's funny, right? Stock in trade. Okay, description of the capital asset. I have to mention the date of acquisition, cost of acquisition, and amount at which it is converted into stock in trade. I have to choose this checklist. I have to check whether I have to ask and check with the SEC whether he has converted his capital asset into stock and trade. If yes, details of the stock and trade to be given. Okay. If yes, obtain details and then cost and these things have to be obtained. Description, date, cost, and amount at which it has been converted. Clause 16 deals with amounts not credited to profit and loss account. This is the favorite area of examiner. Okay. The items falling within the scope of section 28, pro forma credits, the refund of duty of customs or excise or service tax or refund of sales tax or value-added tax, where such credits, drawbacks or refunds are admitted as due by the authorities concerned. Escalation claims accepted. See, not only the escalation claim, but the escalation claim which has been accepted during this year. Any other income and capital receipt, if any. Income falling under section 28. Ascertain whether the SSC has earned any income falling under section 28 or derived any benefit referred to section. Examine whether such income is credited to profit and loss account. If not, report the fact. The SSC should go through the books of accounts of the SSC to find out whether there are any receipts in the nature of section 28 which have not been included in the total income of the SSC. The auditor should ensure that such income have been correctly computed, allowing the expenditure that is statutorily allowable, ignoring the expenditure that is not allowable. Particular attention to be paid to check whether the SSC has obtained any benefit of perquisite referred to in Section 28 and whether value thereof has been credited to profit and loss account. In present time, various companies award various benefit to their dealers on achieving the sales target, like all expenses paid for foreign trip or vehicles, like paid goods, etc. Quantify the value of such benefit and ensure the amount involved is credited to the profit and loss account. Otherwise, state the fact against this clause. Question could be write the audit procedure or checklist for the incomes to check the incomes falling within the scope of 28. That could be a question. Okay. Now, with respect to performer credit, drawbacks, refund of duty, etc., inquire whether there has been any claim. Okay. If yes, then obtain a schedule from the SSC indicating the details of all such claim admitted by the authorities but not credited to profit and loss account. Cross-check the details contained in Schedule 3 with the claims paper and other relevant correspondence including the assessment orders. Know that the item admitted by authorities will mean the item admitted before closing of the accounts, not a subsequent event during the current year. Ensure that the accounting of such claims is in accordance with the method of accounting regularly followed by the SSC. If it is a mercantile system, after account now, cash system, then I will account later. Ensure that all claims admitted have been credited to the profit and loss account. Any exception should be reported. But if cash system is followed, then the facts should be stated in the report. Escalation claim. This inquiry is particularly relevant to SSC engaged in real estate construction, EPC, and infrastructure. Sample basis in respect of a contract undertaken by SSC during the previous year to find out whether there is any escalation claim therein. If yes, then check whether any escalation claim have been made by SSC during the previous year. Obtain a schedule indicating the details to the escalation claims made by SSC during the previous year. Claims that have been accepted by the SSC or the clients or the customers. Ensure the claims have been accepted as a due during the previous year. It may happen only a part of the claim has been accepted. So only that will be reported. Check with been accounted for and the amount involved has been credited to the profit and loss account. If the claims have not been accounted for, then state the fact that the amount involved. If the SSC follows cash system of accounting, the working of claims would be of no significance till the amount is actually received, right? Because it's a cash based on cash receipts and cash payments. Because in that case, nothing will be credited to profit and loss account, but the auditor should state the fact that the amount involved, even in that cases. Any other income. Inquire whether during the previous year, the SSC has earned any income which has not been credited to the profit and loss account. Note that the inquiry will extend to any income which is chargeable to tax and will not be limited only to the business or professional income. The auditor should check thoroughly the bank accounts for any credits. Okay, pay particular attention to interest on fixed deposit, discounts received, insurance claim received, and types of reimbursement. Capital receipt, the last one. It is to be noted the capital receipt is not generally credited to profit and loss account. Hence, the auditor should take enough care to check out any transactions generating receipts of capital nature. Inquire whether the SSC is in receipt of any amount of capital nature during the previous year. Capital receipt may include sale of fixed assets, subsidies, non-compete fees, etc. So, non-compete fees, subsidies could be an example of capital receipt. This could be again an MCQ. Okay, now go through the financial statement, in particular the reserve account, to ascertain whether the SSC has received any such receipts and credit them directly to the reserve account. If the SSC has received any amount of capital nature during the year under the audit, then inquire whether the SSC has credited such receipts to the profit and loss account and state the fact and the amount involved. Check that SSC such a receipt is accounted for in terms of method of accounting followed by the SSC. Now, let's move on. Clause number 17. So this is like where the land or building have been transferred during the current year for a consideration less than the value adopted or assessed or assessable by authority of a state government referred to in section 43C and 50C. If 43C and 50C is becoming applicable for the current year, then this clause will also be applicable. Okay, I have to mention the details of property, I have to mention the consideration receipt, value adopted is the STV, stamp duty value, and whether it is followed. Okay, now audit checklist, obtain the particulars and obtain the following details. Consideration stated in the transfer documents and STV, stamp duty value by assessed or any authority of the state government. Now, clause 18 deals with depreciation. As per the Income Tax Act, in respect of each asset or block of asset as the case may be. First is depreciation, rate of depreciation, actual cost or return on value, adjustment to be made for the new regime. Taxation, adjustment to be made to return on value for intangible asset due to excluding the value of goodwill of business or profession, adjusted return on value, And then deductions, addition or deduction during the current year, including the adjustments of central VAT, and then change in rate of currency, subsidy or grant or reimbursement, by whatever name called. Deduction allowable for the current year, return on value at the end of the year. Okay. Nature of the requirements prescribed, it will be necessary for the tax authority to examine the classification of the asset, then the block, then the actual cost workings, then the date of acquisition, because 180 days or less than 180 days, right? Then check the rate of depreciation, additions or deductions, and then adjustments if any required. For the purpose of determining the rate of depreciation, the authority has to examine the classification of assets into various blocks. The purpose for which the asset is also used have a material in this regard. Hence, the tax authority should ensure the classification is in consonance with the legal principles. Now, audit checklist, where the full deduction of the cost of capital goods is allowed. Okay. Under section 35, the auditor should verify the cost of such amount is not included in the block of asset for the purpose of depreciation. To obtain the fixed asset register and check the classification, and amount is not included. Rate of depreciation should go through the rates of depreciation prescribed for various category of asset, and if to ensure whether there is any additional depreciation to be claimed. If it is claimed, it's proper, then fine. Now, actual cost or return on value, opening WDV should be checked with the previous year tax audit report. They have to verify segregation of assets between greater than 180 days and less than 180 days. Newly coming into existence during the previous year, auditor shall check the samples of vouchers. If any amount is capitalized, in order to purchase, auditor shall check whether the amount is eligible for capitalization has been capitalized. Basis of determining the cost, and then credit order should go over the excise duties records, and then in case of an asset purchased in foreign currency on a deferred payment basis, verify the increment or decrement and liability thereof and change in exchange rate can be verified with the RBI bulletin. The auditor shall take a note of the provision of section 43A in terms of determining only when liability due to fluctuation in foreign exchange rate is taken into account at the time of making the payment, irrespective of method of accounting followed by the assessee. Okay. In case of subsidiary, the auditor has to verify existence by going through the letter of appropriate authority granting the subsidy. Okay. Now, check whether the assessee has opted for special taxation adjustment to be made for the return on value of the intangible asset, excluding the value of goodwill. Now, sale or purchase of asset during the year, the auditor should review the fixed asset register and check the dates on sample basis, obtain a list of assets sold, and then obtain a copy of documents relating to the purchase or sale of fixed asset. Depreciation allowable, the auditor shall check whether depreciation is calculated by applying the correct rate of depreciation, and then return value is properly arrived, and he has to check whether only 50% of the amount is allowed for those assets which are put to use less than 180 days. WDV is checked both the beginning of the year and the end of the year. Then calculation of depreciation should be ensured and recomputed. Okay. Then admissible under sections. Okay, I have to check. I have to make it as a separate note. Okay, here. For these sections, what are the amounts have been admissible, amount debited to profit and loss account, amount admissible in this behalf. Okay. See. For this section, I have to check it. Now, verify the claim of deduction with specific reference to the following. The fact the assessee is eligible, the action is correctly computed, and then the assessee fulfills the conditions specified. And the specific account for availing the deduction under each of the section. Okay. Reserve account properly utilized, and then check the details of expenditure debited or not debited to the profit. The clause for the day would be say clause 20. Any is with respect to the employees. Okay. See, any amount paid to the employee as a bonus or a commission for services where such sum was otherwise payable to him as a profit or a dividend. I have paid it as by naming it as bonus or commission, but it's actually I'm paying as a profit or dividend. Obtain a list of employees eligible for bonus, and then check the basis of calculation. Obtain a management representation. Then auditor should obtain from the assessee particulars of expenditure incurred on bonus expenses in the description of persons, bonus amount, expenditure not considered as bonus, description, and remarks. Check for the accounts, commission, bonus, salary, staff welfare, to ensure all the bonus and commission paid to the employee have been included in the statement. Basis. Details of commission paid to employees should be furnished, right? Name of the employee, amount, description of commission, basis of determination, etc. The auditor should check whether the bonus and commission paid to the employees for services rendered. For those services which have been rendered by them as a part of employee contract, only I am paying this bonus and commission and not a part of profit and dividend. If it is given as a profit and dividend, I have to report such payments. Okay. Details of contribution received from various funds. Okay. It's like PF, EPF, ESI, have to receive from the employer deposit, right? Those sum have to be shown here. For example, I've received 7,000. Due date is 15th of next month. Okay, for example, I have received some 7,000 due for Jan month. Due date is 15th February, right? They paid only 6,000. Then, okay, or actual amount I've paid 7,000, but I've paid on 16th of February. Then the entire amount will be disallowed. And contribution from employee towards the fund set up for their welfare. Obtained as a receipt from the employee towards a contribution to any provident fund or superannuation fund or any other fund mentioned. Schedule shall also be indicated the rate of payment and actual date of payment. Also verify in the same to the payment challan. Check the correctness of the statement. Scrutinize the ledger. Make sure the amount received from employees has been deposited with the concerned authority within the due date. So with this, we have completed till clause 20. Stay tuned for the remaining clauses. If you really find it useful, please do like, share, and subscribe with your friends. Thank you so much.